What if every market crash was actually your biggest wealth building opportunity? The truth of the matter is, most investors panic when the markets drop. This is despite the fact that markets tend to go up, but also go down. During those market downturns, you're not supposed to panic sell. But in fact, that's when a lot of times the emotions take the better of us. And in fact, our emotions often override our logic. Raise your hand if you've been ever in that situation when you've panicked seeing your portfolio going down on a red day. I know I've been one. According to Morningstar, over the past 150 years, the US markets have in fact experienced 19 major crashes. Now, these are defined as a decline in the stock market by over 20%. Despite that rough patch, investors who stick to a well-proven strategy of investing in the stock market as a whole have been rewarded. In fact, a dollar invested back in 1871 would have been now worth over $32,000 inflation adjusted by mid 2025. And if you think about it, these market crashes happen approximately once a decade. Now, with that knowledge in mind, all it takes is some preparation. Smart investors prepare for those market downturns. They are not afraid of that. They're ready. They think ahead, they plan ahead, and they ensure that through due diligence and preparation, capitalize on those opportunities. Warren Buffett, one of the greatest investors of all time, is famously quoted, "Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble." In this short video, I want to tell you how my wife and I, for our household, have managed to build a large enough portfolio of just shy of $1 million by following simple strategies of investing broadly in the entire world stock market through low cost, diversified index funds. And really, our trick has not been to try to time the market or trying to be the next Warren Buffett for that matter, and rather make investing super simple, making it as boring as possible. In fact, have it on autopilot so that every single month we put aside certain amount of money, following essentially the approach of paying ourselves first, paying ourselves by putting aside money and saving it for our future, investing it for our future, and capitalizing on that, giving our portfolio enough time, allowing our portfolio to compound when you have market crashes. If you stick to your game plan, you're going to buy those quality businesses at a discount. And it wouldn't matter because what you are putting in the stock market, investing it currently, is a money that you're not going to need in an immediate future. You're going to probably at least consider investing in the stock market for the next 10, 15, 20 years. So keep that in mind as you're thinking about investing in the stock market. I do encourage you to check out the rest of my videos on my channel, as well as follow me on Blossom.